Welcome to Money Conversations with KJ. KJ is a lifelong entrepreneur who's made a lot of money, lost a lot of money, and found his way back again. If you're looking for a sterile how-to, you're in the wrong place. KJ and his guests will walk you through real-life situations told by the people who live them, and they are as messy as they are inspiring. Each episode will offer lessons learned, advice on how to replicate successes and avoid pitfalls, and a new perspective to power your financial literacy. Far from a one-size-fits-all, this podcast can help you build a roadmap to your personal promised land. Milk and honey for some, whiskey and steak for others, and remind you that you're not alone on this journey.
Well, hey, everybody. Welcome back to the show, Money Conversations with KJ. I'm your host, KJ. Today, I have a couple on today. And actually, you guys are the first couple that I'll interview pretty much. Usually, it's just one person. So I'm really excited to interview the both of you. And you guys are married. So I think you guys out there listening, I would imagine a lot of you guys are married out there, in the journey with money as marriage comes it can be a whole different ball game. So welcome, Nestor and Jennifer. Is it Nepal? Is that how you say it?
Salgado.
Okay. And so I know that, Nestor, you're a real estate agent and Jennifer is a credit repair specialist. So
yeah.
Listen, welcome to the show. I think, we're going to give some good value to the audience out there, some good takeaways. Everybody can learn stuff about credit and needs to really learn how the credit game works. It is definitely one of the modules that I teach. I think when people fully understand the credit game and you can use it to your advantage, it's very, very powerful. It's just nobody sits down and tells you how the game is actually played. And understanding that credit is a for-profit business. So, all those people that extend credit cards, they're trying to make money.
Absolutely. Oh, definitely.
They're not just helping you; they're trying to make money. So
Definitely.
again, I usually start the show with the background, and you guys shared with me you've been together 20 years. I want to go before you guys met, so you'll probably each answer this question: how old were you, and as far back as you can remember, when you understood what money was for and how and why we used it?
For me, I remember when I was like in third grade, so I'm from Mexico originally, and we're walking, old school, like you see, the train, and you're like, man, this is bad. And I knew that obviously, that I didn't want to live like that. So from early age, I knew the fact that, we didn't have the money. We were poor, right? Very humble. And that's always stuck in my head. I mean, I still have the vivid image of that, right? Walking and going to school a couple miles and this train just shaking his ground. And you're like, man, this is bad. So I knew that from the get-go.
So that's roughly about 7, 8 years old, roughly?
Roughly about 7, 8 years old.
Yeah, right. Jennifer?
For me, it was when I was 15 and I got my first job. My dad was like, if you want a car, you have to earn the down payment for the car. So I was like, okay, I'm going to go get a job so I can get a car.
You know what? That's such a common story that I hear. That happened to myself. My dad said, hey, actually, he was the opposite. He goes, I'll do the down payment. You make the payments.
Mm-hmm.
I said, okay. But anyway, it's interesting. So you were 15, you were around 7, 8. At that age, let's say for you, Nestor, at that point, had your parents, mom or dad, sat you down and talked to you about money at all?
No, not at all. I mean, I didn't really know how money worked or whatnot. And, I just knew that we didn't have it. And,
you were just looking that you knew you wanted a better life for yourself.
Absolutely. Correct.
And that you were going to have to do something you didn't know yet at 7 or 8, you were going to figure this thing out. And the reason I ask is, my first module that I always teach is about mindset. And whether we all realize it or not, with money, our mindset is set really early in life. I'm finding around 5 years old, right? And when parents never have conversations with their kids, we all have to kind of figure it out. Right. And anytime we have to figure anything out, it takes longer and we have stumble blocks and, we learn from mistakes. So did anybody sit you down, Jennifer, at any age?
No one sat me down. But when I turned 18, I started working at a bank. So that's when I started learning how everything worked, credit, and that you had to save money. I had clients coming in and depositing lots of money, and I'm like, that's my goal.
Right. You want to make the big deposits.
Right.
Okay. Makes sense. And now I know that you guys have kids. Have you had conversations? Do you have conversations? And how old were they when
Definitely.
you started actually talking to them about money?
Absolutely. For us, it's always been something that's kind of our cornerstone in our family that we talk about a dollar. Like I always tell my kids, I'll say, hey, you think that we make the money easy, but, we work really hard for it. And then we show them exactly, you have to respect, what it can do for you or, stuff like that. So we've always had conversations with them, right? Ever since like my oldest, she's turning 18 here in a couple of days. Right?
Yeah, in a few days.
In a few days, we have an adult in our house, and she understands, the value of a dollar.
And so explain to the, I hear that term a lot, right? Understand the value of the dollar, and the reality of the value of the true value of the dollar is not very much anyway, but most people trade time for money. Okay. I think a good lesson that we could teach our kids is trading time for money and never investing. You will never become wealthy. It's mathematically impossible.
Right.
You just can't, because most people who work jobs are, say, a 40-hour work week or whatever.
Right.
You're not generally going to make enough money per hour to, at 60 years or whatever of age, any age, to think I have enough. Right.
Correct.
So when you say, when you teaching your kids the value of the dollar, do you break it down? I mean, how do you break that down to them?
So with me, I invest, right? I believe silver, I stack silver. So my kids know, as far as you're talking a point about the dollar, that with inflation going on right now, right? I tell them as far as, what the markets are doing. So they understand, that, it's commodity, excuse me. But they understand that, that is going to bring value to them. Also have my life insurance, basically saying, look, if something were to happen to dad, this right here will actually cover you guys for a little time, right? Because everything is going so expensive. And then also too, we talk about as far as, because we pay tuition for my oldest, she understands that we've sacrificed for her, right? And we do basically an account for them. So they know exactly what's going in and out. The funny thing is that, they want the money coming in, but they don't want to dish it out. The other day, my
they
daughter,
want to use ours.
Right.
My oldest, right? We had a party for her and she got some nice gifts, and she goes, hey dad, my wife said, hey, she needs gas. And I go, no, have her pay for it, have her understand, what it is that, when you take money out of your pocket, that you're saying, okay, listen, am I spending this wisely or am I just throwing it out? All right. So that's one thing that we actually teach them.
Excellent. I mean, I'm super excited to understand that you are having these conversations, because you guys recognize, one, you didn't have them when you're their age, right? Either did I. And so we all have to figure it out. And so when I talk about the mindset of money, right, part of my training is talking about, hey, listen, to the kids, we really need to learn the difference between wants versus needs, right? Because unfortunately, kids spend most of their money on wants and not needs, and then ultimately they don't have any, right? So it's a huge lesson that they need to understand. It's funny because my youngest daughter, who's 21, and when I taught her these lessons, and she tells me now, still to this day, when she's out at the store looking and shopping or whatever, and she says she hears me in her head, do I need this or do I want this? Right? Because I've just instilled that so deeply in her, and she's become a very good, you heard the term, people, hey, I'm a good saver, right? But I've taught my daughter to don't save just to save. That's silly. We save for a purpose, right? And so when we can teach our kids what we should do with money, it's a tool. And like any other tool, like in a mechanic, if he has a toolbox, if he doesn't use those tools, they're useless. They're just sitting there, right? So if we save for a purpose, and there's many purposes that we'll save money for, you will have money over time. Right. And not be out there squandering. So Jennifer, what you had mentioned that, so after college, or after school, you went in the banking industry, which would lead most people to believe, I worked at the bank, so I know how money works. But I've talked to many bankers who don't really understand. They understand the banking industry,
Right.
but the banking industry doesn't really teach you money concepts.
Right.
There's plenty of people I know that work at the bank, they don't have no money.
Oh,
You know what I mean?
definitely.
And
Definitely.
again, we're all earning money, but it's just what we do with it after we earn it. But talk to me about it, because it sounds to me like you went down a certain path, which is credit repair. What motivated you and got you excited to follow that path?
So I had been in the banking industry for 20 years. So throughout my career, I saw how much people were getting charged for having bad credit or subpar credit in the banking industry. And I had become a controller at the banks, and I felt like my career had plateaued at one point. And I was like, you know what? I need to do something different, something where I can advance. So then I decided to go back to school to UNLV and get my MBA. So I'm currently in the process of getting my MBA. We'll graduate next June. And in the process, I was like, I need to start a business. I need to do something different because I have an accounting background. I have a banking background. I'm like, what can I do? So I started brainstorming and decided, hey, right now with the pandemic and everything going on, people are really going to need help with credit. So I decided to open up Fix My Credit, NV.
Awesome. And you're 100% correct. You know, we still don't know all the ramifications of shutting this country down and people going, having to go home, right? And so as things are trying to come back to normal, whatever normal means, with their money, and, you know, people are still getting, you know, their unemployment checks and whatnot. Yes, they're definitely going to need that. And again, I always just say that credit's a game. And my saying I have is, listen, like any game we learned as kids, if we didn't know the rules, we cannot win the game. Right.
Correct.
When you learn how to play checkers or Monopoly or whatever as a kid, you had to understand and learn the game to be good at it and, you know, win. Not everybody's super competitive, but let's just say understanding to play the game. And that's the same with money, right? And with credit, right? And so people don't, unless you're proactive, and unfortunately, most people are not proactive in saying, well, how does this really work? This whole credit game.
Right.
But we've got people, and I want to make sure this doesn't come across wrong. We got people like a Dave Ramsey and a Susie Orman, which I think are fantastic people in what they teach. But Dave Ramsey more so is 100% about, I don't need credit. Don't no credit cards. Forget credit. You don't need credit. Well, he's sitting on the luxury of, he doesn't need any because he likes to boast. He doesn't even have a credit score. Well, he's done very well for himself. So, you know, when you have multiple seven figures, you're okay, maybe you don't need it because you just pay cash for everything. But as you're young and you're getting into the working world, I mean, credit is in our world today, credit is extremely important.
Definitely.
You know, we know people getting credit card debt. It's one of the second largest debt out there behind school debt, right? Because people don't understand it and they like to blame credit cards for that. But I say, listen, credit cards aren't bad. People say, oh, credit cards are bad. You shouldn't have credit cards. I'm like, well, first of all, a credit card is just a piece of plastic. So I don't think a piece of plastic is bad, right? Now, the people who use them irresponsibly, we could classify that as bad possibly, but they're just being irresponsible because one, they didn't understand. You know, when you get, because you've paid your bills on time, someone gives you a credit card for $2,000 limit, doesn't mean someone just gave you $2,000 go shopping. That's not what that means, right? So now you're on the other side of the coin when they've done that. Like, how do I get out of this mess?
Yes, definitely.
So what are some of the common things that you're seeing out there, or the most common when you're doing some credit repair?
So a lot of things that I see are charge-offs. So people not paying medical bills, people maybe having late payments on their credit. So an important part of maintaining a good credit score is having a credit utilization of less than 30%, making sure you pay all your bills on time. And if you're looking to make a big purchase, for example, a car, a house, try not to do any credit inquiries, try not to charge anything on credit cards because that can dramatically decrease your credit score. Right.
You know, I hear stories out there, and I'm pretty well versed myself in credit. And, you know, credit goes up to 850. And I hear people get really excited when they say, oh, my credit score is 800 or 820 or 840 or somewhere in that area. And other people will say, oh man, I'm barely at 740 or 750. Understanding when you're out there buying one of these big ticket items, I like to tell people, listen, after 750, I consider it gravy, because
Mhm.
whatever you're applying for, you're going to get the same rate and everything at 750 as the guy who has 850 or 820 or 830 or whatever. And understanding that your credit score, I like to describe it as a heartbeat, right? It's always
Right.
moving,
Right.
and it's always
Right.
moving because we're always spending money.
Right.
Exactly.
So unless you go stagnant and don't spend no money, your credit score moves every 2 weeks. That's just the way it is. And if you know ahead of time, hey, I want to purchase a house in 6 months or whenever, you don't wake up on a Saturday morning on a whim saying, hey, I'm going to go buy a house today or something. You might say, hey, let's go have a nice lunch today. Then you can do that on a whim, but not a big ticket item. So let's educate the people a little bit on that because of your experiences and the people you talk to. Timelines are really important things that people need to understand, right?
Mhm.
Right.
Some people think it takes a really long time to repair credit. And in some cases, I think a lot of cases, not. It just depends.
Right.
On what
Give
they
us
have.
some examples of what people can expect. Let's say if they've had, they figure they want to go buy some car, and an average car is $30,000 today. Let's say you want to go buy some $30,000 car, and you want to keep your interest rate below 4%, right? What type of credit score do you have, and how long, if you're at say 600 to get to 700, do you think it would take somebody?
So, I'll step in here on this. I had a deal where it was a commercial deal, and the lady, we were selling 2 houses to a corporation, and she was telling me, we're looking at her loan, and the rate was high. I'm like, man, this rate's pretty high. And then afterwards, I offered to say, hey, my wife will help you out, get your credit up. The deal fell apart. The corporation backed out, and she's like, look, these payments high for me. I need to fix the credit so that way I can pay a better, payment. So she was, I think, what was she at, Jennifer? 640?
Yeah, like it's
640 in 3 months. Jennifer was able to get her credit to 776. We referred it out to a lender, and he's like, man, she was at a 5 and she's getting like top rates. FHA streamlined, basically, they don't have to document anything. And the lady's going to save 250. And now we're talking about a lady that works just in the casino, where $250 for her, it means the world to her, right? Where she knows that that's going to stretch out her dollar for her. And she's like really, really happy. And, stuff like that we see that, that people in this world, we want instant gratification, right? Where if someone was to educate her, said, listen, instead of you taking on debt when your credit 640, why don't you step back and see what you can do to get your FICO higher, so when you step into a dealership or you step into a lender's office, they're going to give you the best rate possible, right? Like, I know that we go to dealerships and they hate us. I mean, we have cars at 0% interest rate, they just don't like us. But then basically we're like, look, you know what? We know what we could get and so forth. But then once you actually understand credit and how it works and what you could do to protect yourself to actually pay less interest, guess what? That makes me happy. And I know that we're doing the right thing for a client, especially when she sees good results like that. It's like, wow.
So in that example, so 90 days to grow roughly over 100 points.
That is, something that's out there that I would say,
it's not normal.
Here, right? We don't want to say that we do that all the time, because it all depends on a client, right?
And it does. There's a lot of variables. And again, if we're going to teach a lesson to the folks out there that are listening with credit and they're kind of lost, they don't know what to do. They're just, all they know is my credit's 640, right?
Mm-hmm.
I'm going to pay high interest rate on whatever it is I'm going to go out there and purchase. How do I get, and they're like, I don't know how to get it higher. That's their question, right? What do I got to do? Because they feel like I'm paying on time, or they feel like, how do I get out of this revolving wheel here? So Jennifer, what kind of advice would you give somebody who's kind of stagnant at that 640, 650, 660 range?
So first, I would have them look at their credit card utilization. If their credit card utilization is above 30%, they need to pay some of that debt down. The way they can tackle that debt is look at each credit card, see what credit card is charging the highest interest, and tackle that one first. So what that means is you would pay the minimum payments on all the other credit cards and tackle the highest the credit card that's charging you the highest interest first. Pay that down as much as you can, and then you slowly go and tackle all the other credit cards.
Right. Right. So there's another way that we can do that, because I've done it. I've shared it with so many people. Some people out there believe, okay, I have a credit card with a $2,000 limit. That's all I want. I don't want no more, because they think, well, if I get a $5,000 or $10,000 limit, I don't want to get myself in trouble, kind of thing. Right. But you guys out there listening, what you need to understand, this is just nothing but a simple math equation. Right. And so when Jennifer says we need to be at no more than 30% utilization ratio. So on $1,000 credit card, you can't spend more than $300. You got to stay under 300. But on a $10,000 credit card, now it's 3,000. And so if you find yourself where, man, I'm at 40 or 50% on my card, you could do one of a couple of things. You can go get your limit raised. That'll change your utilization rate. You can go get an additional credit card, because it's 30% of all your credit cards together combined, right? Some people think it's one by one. It's combined. You could have 5 credit cards, 4 have zero balances, and your fifth one is at 50% utilization, you're over the limit.
Right.
Then if you would have used all 5 credit cards, a little bit on each one to stay under the 30%, right? So I think these are factors that people need to understand and learn out there. The quickest way is to, if you got a job, you're making income, and you can either get yourself an additional card, you accessed more credit, utilization goes down, credit goes up. It's just a cause and effect, right? Those are great lessons. How many people do you come across that's maybe the number one issue?
Oh, tons.
Is that pretty much the number one issue?
Yes.
Okay. And do they realize it, or do they have an aha moments when you explain it to them?
You know what? They don't really understand. A lot of people that I talk to, they don't really understand how credit works. They just know they have a credit card, you need credit to purchase stuff. And basically that's the extent of it. So when they come to me, I educate them on what they need to do. And I'm like, okay, if you follow what I'm asking you to do, then we will definitely accomplish your goals. Like the other day, I had to call one of my clients, because before I take on a client, I tell them, you need to make sure that you don't do any credit inquiries while we're doing this process, because you're going to revert back. You need to make sure that you're paying everything on time. So I called one of my clients and I was like, hey, we discussed this. You weren't supposed to make late payments because now your credit went down. So he's like, oh, I'm so sorry. I'm so sorry. And I'm like, okay, just don't do it again, because your goal is to purchase a home. So now guess what? He's on track. What I try to do is I try to hold people accountable and tell them, if this is your goal, in order to get to your goal, this is what you have to do.
Right. Which is a great money lesson. Again, I think in today's world, we all definitely need credit. And once you start really acting responsible with your cards, there's advantages. And I talk to the people about the advantages, right? Points, you're getting points, money, cash back, or airline miles, right? Those are one of the 3 perks that you're going to get. And I know people that what I teach people is, listen, we all have monthly bills, right? Car payments, gas, telephone. I mean, just all these bills that we have every month. And what I do, and I taught my kids is, hey, listen, pay all, I call these my anyway bills. I got to pay them anyway every single month. I pay them all with a credit card, so I can stack up miles, points, and money, cash back. So I kind of split it up different ways, right? And because if you're going to spend, let's say $4,000 a month or your living expenses, and you can spend $3,000 of that on credit cards, do it. And in today's world, I feel it's a lot safer for people out across the land to be using credit cards than your debit card, or even cash out of your pocket, because God forbid you get mugged or whatever, someone steals your wallet / purse, or gets a hold of that debit card. When that money gets taken away, you worked at the bank. That's a real hassle to get that back. And oftentimes you don't even get it all back, right? They're like, we couldn't recover everything. Versus if your debit card, I teach my kids, leave your debit card at home in the drawer, go pay everything with credit cards. And then I have them pay them every 2 weeks. Don't even wait 30 days. Just pay them every 2 weeks. You'll just be in a cycle. I mean, you're spending that money anyway. And that's how you grow credit exponentially quick, because I ask people, how do credit card companies make money? Right. And you know how credit card companies make money. How do they make their money? The bulk of their money.
By maintaining a balance on that credit card.
Well, they make money.
Charging annual fees too.
They make the bulk of their money through merchant fees, right? Every time you or me, the consumer, swipes the card, whether it's at the gas station, 7-Eleven, Macy's, wherever, they all pay a fee.
Yes.
That's where they make, I would say, 80% of their money. Then they're going to make some money, a little bit on interest, a little bit on fees. I mean, they got multiple ways of making money. But if that's how they make their money, and this is the game, it's their game, we're playing, like, let's play their game because how they want us to, which means they want us to swipe.
Right.
Swipe away my anyway bills. I'm not out there buying garbage, right? Because I say there's good debt and bad debt. Bad debt is consumer debt, things that don't make you money, right? If a home loan is a good debt because you're buying a house, it's appreciating, blah, blah, blah. So when I go down that road and get people to fully understand now when they use that card, right? You're using that card for a purpose and responsibly. And you're not buying things that you can't pay for with the money you already have in your account. And you're safe walking around the streets in case you get mugged or whatever, or God forbid, identity theft is now crazy on the planet, right?
No, definitely.
We get all hacked. You get hacked if you swipe your card at Target or Home Depot, right? They can get your information. So, but if they don't have your information to your actual banking information, they can't steal that. Let them steal the credit card company. They're insured for that.
Right.
Take it. It's not my money anyway if you took it. You didn't take my money. Does that make sense? So I love the fact that you're doing that. How long have you been helping people out with credit?
Well, we just started this year. So it's a pretty new business, but we have about 25 clients right now that we're helping.
Nice.
And I just feel like I'm accomplishing something by assisting people in saving money.
Oh, 100%. 100% you are. So many people need it. Give a quick shout out. You have a website that people can go and check you out?
We do. It's www.fixmycreditnv.com. And pretty much they go on there, look at the portal, they can sign up, they can send us an email. Jennifer will be more than happy to reply. And just one tip as far as what we decided to go into the credit route is I have a good friend of mine who's actually an attorney, but he works for big banks. He works for,
The creditors.
Creditors. And when I ran this by him, he's like, I've been telling people to do something like this to help the people. He's basically just goes after people. He puts liens on it. And he's like, basically, look, this is something that everybody needs here in Nevada, right? But he's pretty much on the other side of it, right? From our perspective, we really want to help out, right? So that's one of the biggest reasons too that we decided to go full throttle with this.
So when people reach out to you guys, again, I have listeners literally all over the planet. So you guys can help anybody anywhere?
No.
Yeah,
Okay.
we are licensed, and when you actually talk to somebody that does credit repair, credit restoration, make sure that they have the proper license. We're licensed in Nevada, right?
Okay.
Bonded here, right? And we are registered with the Mortgage Lending Division.
Okay.
So we pretty much are straight by the book and stuff like that, and make sure that, they're, especially with the surety bond, right?
Right.
We can't touch other people's credit in other states. I mean, are we looking to expand? Possibly, but right now we just want to grow this and understand it 100% before we move forward.
Okay. Let's talk about tradition. So we talked a little bit about how mom and dad didn't talk to you about money, right? Did you guys, during the course of before you met and when you guys met, when did you start talking about money after you guys, became a couple kind of thing?
So basically, once we signed that marriage certificate, we started talking about money.
So you didn't talk about money before?
No. Because we were dating and we weren't living together. So there was no need to commingle our funds.
And then, so when you got married and then you had the money conversation, how was that?
We both decided that we're putting everything into one pot and that's how we're paying the bills. We're working as a team and we're just going to work together and build that pot.
So what kind of conversations or questions are your kids asking you about money?
Well, right now they're excited because they know mom's, she's, this Brown's like, fix my credit. Mom's helping people with the credit, right? But as far as money conversations, just to touch on this, my daughter just graduated high school, and we had to have that hard conversation with her about taking out loans. We did the spreadsheet where, look, if you take a loan out and you look at the interest rate and you defer that payment, guess what? That interest rate is starting as soon as you start school. Right? We did. She was looking at Pepperdine. She got accepted at Pepperdine University. It's my bragging moment.
You should.
And she got a nice scholarship, but guess what? There was a gap of $40,000, and that's a pretty big gap just for a bachelor's degree, right?
Right.
And my kids too. My middle one, Alex, he's very smart. He was like, "Dad, why do they want you to pay to get educated?" I go, "It's just the way it works." I go, "But you have to learn how to work it and make it work for you." I said, when I went to college, it took a while to actually graduate from college because I had to pay for my own tuition. I didn't get no grants. I didn't get no scholarships or nothing. So I was just paying and going, paying and going, paying and going. And I knew for myself, I told myself, listen, I'm going to have this piece of paper. So that way later on, my kids to see that they need to get their education. For me, that's a big, big part. All my kids know that, right? So anyways, going back to your question, when we started breaking down the numbers, we're like, look, if you just graduate, that university, and you're going to be almost 200K in debt just for a bachelor's degree. I go, let's break down how much they're making. I go, that university is saying that the average person that graduates from that is like 72,000. I go, that's not a lot of money. I go, then you want to go to law school. I go, let's look at law school. Let's see how much you have to pay for a top law school. That's another 150, 200,000. I said, look, by the time you're actually finished with your law degree, you're going to be in debt almost what, 700, 600,000. And we've seen that. I mean, I've seen people post certain things like where they say, hey, this person has 7,000 or 700,000 in debt just in student loans. Like, how do you help this person?
That's unbelievable.
Yeah, you can't, right? So then I told her, I said, listen, I go, you have a nice nest egg. You stay here, get your undergrad, go to law school. So when you finish law school, guess what? Let's say if you have 200K, 250,000, you could actually open up your own law firm and have people working for you. I go, instead of going the rat race where you're in debt so much that you are actually working for a high power attorney and they're making you work and you're only making that 60, 70,000 for the first 5 years, whatever it is, until you get a big case. All right. And I tell her, so listen, I go, you know what? You have to leverage what we have. I go, what we're building right now with this credit repair, with your mom becoming a CPA here in a year. I go, we're going to be able to leverage, people because we're going to help them. And later on, we'll be able to refer that to you, and that's future business for you. All right.
I think the big lesson you could teach your daughter is you used the word, right, which is leverage, right? And we can leverage everything. We can leverage people, we can leverage time, we can leverage resources, right? And anytime we can leverage anything to our advantage, it's the results can be massive, right? I think, and I teach the rule of 72, compounding, how compounding effect works. It's such a powerful equation, but it works on time, and it's so beneficial to the kids at 18 and 20 and whatnot, right? That the sooner they really understand compounding and how that really works to their advantage, the better, right? Most people don't ever understand it. But one thing's for sure, the sun's coming up tomorrow and the day after and the day after. What happens in between in our lives is different. But so the compounding effects every single day, and learning that rule of 72 and to your advantage, leveraging, I used to say leverage money, but I leverage people, time, everything, right? Like you said, if you can open your own firm and you have people working for you, you're leveraging people to make money. You're leveraging their time, right? To make money. Awesome. So I 100% agree. Education is key, but boy, how scary is it to come out at 25 years old and having $3, $4, $5 plus $100,000 in debt? That's like a house that you don't even have.
Exactly.
And then you're expected or want to go buy a house. Again, I think my personal opinion is, listen, unless you're going to go spend those kind of dollars, invest those dollars in your education, make sure whatever it is you're learning can make multiple six figures a year, or you'll be 40 something years old until you end up, just even.
Right.
And that's, half of your learning career very scary stuff. What are you guys doing today, or what do you teach your kids about investing?
Well, I invest. I'm pretty much, like I told you, big on silver, gold. When I get it, I show it to them and, obviously tell them, hey, careful touching it. Right.
Yeah.
And they understand that. Right. And they're like, hey, why do you get this? I'm like, well, this is for future. Right. Also, as far as, investing in ourselves, like I have was it whole life policy?
Yeah.
So it's 20 years.
Like cash value.
Cash value, 20 years, you pay it out. And I said, listen, I go, look, this thing's going to compound. Like we're talking about compound effect. In 20 years, guess what? When I'm, 60 or whatever, I could get that money and I could use it for something else. Right. So they understand that. And then I show them the graphs. So listen, this is what they're telling me that I'm going to get, as far as percentage, but I go, but the policy is performing a lot better than what they told me. Right. So this is pretty much where, as I get older, it's going to keep growing and growing. And they're like, wow, right? Another thing too is real estate, right? Talking about real estate, because the fact that you're like, look, if you're actually spending money and you're renting and you don't own, you don't get advantage of tax write-off, equity, right? And there's so much stuff you could do. So they understand that from the early age, right?
So Jennifer, working at the bank, you were privy to understanding a lot of these other vehicles that we can all invest in because there's active investing and passive investing, right? You just described a little bit of both, but when you want to invest passively, right, where you're not in the day-to-day trenches of what your money's doing, what are some of the vehicles that you learned when you were at the bank all those years?
So most banks have CDs that you can invest your money in. It ties your money up for a certain term. So if you're looking to do something with that money, you might want to go like a short term, a 3-month CD. If you're not looking to do anything in the next few months, that you might want to do like a 6-month or a year CD. Right now, because rates are so low, I wouldn't recommend investing in CDs or putting your money in a savings account. If you can either find other avenues to invest your money, that's what I would recommend. Maybe like stocks right now, put money into your 401k, but not leave your money at the bank earning like 0.01%.
Yeah, I mean, my belief at the bank, that's the last place I want to put my money.
Yeah.
It's just a small amount, my short-term money, pay my bills, my lifestyle. Mm-hmm. No, we all need to learn how to, and at the young age, I had my kids open up, I think my youngest did hers at 17, actually, her own self-directed Roth IRA. And now we also have her invest in index funds, right? These are all, I says, your Roth IRA is definitely long-term, but working on how compounding works, I showed her that if she at 17 maxes out every year, which is $6,000, if she does it for 7 years and never sticks another dime in there, at 62 years old, she'll have about $1.8 million, right? Mm-hmm. I said, but you're not going to stop at 26 anyway. So just keep going. And, whatever you do in life, that at the end, you'll be fine. Index funds are great for money because your rate of return is much higher than just any type of savings account that you're gonna be able to find out there, whether it's at your brick and mortar bank or your online bank, because they're all less than 1% anyway. But at least an index fund, there's so many to choose from, but a lot of them are up there in the high single digits. Some of them are in the double digit annual returns, where now when you truly understand compounding, and if you're getting the rate of return of 6% on your money, how long does it take my money to double, right? Versus 0.25, 0.55, which is nothing. These are areas that, at least if I need money, I can liquidate an index fund in about 3 days. I can get my money, right? Versus tying it up in a CD. Or if you put it in a 401k, getting penalized for pulling out your money. Or if it's in an IRA or even the Roth IRA. The Roth IRA, you can pull out what you actually put in. You just can't pull out your earnings. There's rules for that. But I think teaching the youth, listen, I've got to park my money in places where my money is working, right? Because Warren Buffett teaches us, listen, until you learn how to make money while you sleep, you will work till you die. And so these are some of the areas where we can make money while we sleep, because otherwise we're trading time for money, right? You do what you do for a living, you're trading money, or to make more money, I teach the kids, trade value for money. like what you're doing with your new business, right? You're trading value for money. You're not charging them. You're not charging them an hourly rate. I'm sure you're charging them. I do X, Y, Z for this amount of money. So you're trading value. And that's how we all can make a lot more money, is by trading value. But unfortunately, the mindset of what they teach you, again, you just described, you're having your daughter go get an education so she can go get a job. Jobs pay by the hour, right? Whether it's hourly or it's a salary, which is just an hourly broken down differently, right? Understanding how we need to put our money to work as early as possible. And the ones that really truly understand it and can do it before the age of 22 are going to be so much further ahead from their peers at 40, that there's a lot of people that I interview that are 50, 60 years old. And it's the old Monday morning quarterback. Man, if I knew this when I was 22, would I be in a different position, right? How many times have you heard that, right?
Right.
So it's that valuable of conversations that we need to have with our kids, and we should have them with our siblings, our spouses, our friends, anybody who you see struggling, because credit's one piece of the pie, right? Yeah, let's fix that credit, because bad credit is an anchor on you, growing money. It's a big anchor. It can't be, if you got a tax lien or something, that's a real big anchor that you got to take care of before you can actually grow, versus I haven't been paying my bills on time kind of thing. Okay, we can fix you a little, sooner than something like that, versus an actual, some sort of a lien. That one's going to take you a little while to get your credit to bounce back. But for the things that we all need to buy with credit, how often are you going to buy a car? How often are you going to buy a house? I mean, these are things that are just years apart. So you're not doing these things monthly, but we want a good credit, because you don't want your insurance rate to be sky high because your credit's 540 or whatever, right? The insurance companies are looking at it. Getting a job. Some people can't get jobs because their credit's too low. And you're like, but I'm qualified to do the job. Because what does it tell an employer when they all pull credit now when they want to hire you, right? What does it tell an employer without even knowing you? What does it tell them when you have a score of 540?
They're not responsible.
Yeah.
Exactly. And so, like, you're running a business, you want to hire people. Do you want to hire a responsible person or a non-responsible person, right? And so that's how important it is for us to get those scores at least to the 700 mark. The good rating, right? You're good. Right. Get it there. And knowing that it fluctuates, and then doing all the right things, under 30%, pay on time. I mean, there's 5 key factors of why their credit scores do what they do. You know this. So teaching everybody all of those things are vitally important. So what is your thoughts on retirement? What do you talk to your kids about retirement? What does retirement mean for you guys?
For me, retirement basically looks like, where you're saying passive income, right? Building something where you could actually say, hey, this is monthly that we're making, right? This is something that where we just step back. And if I do decide to go to work, because I'm a busybody. I mean, even if where I hit that age of 60, 65, 70.
I'll probably still be working.
Yeah, I'm always doing something. I like helping. I like doing certain things, right? And whether it be from real estate, as far as, where you do a couple, well, right now it's tough to do a flip because of the market, the margins, right? It's really, really aggressive, but everything changes, right? Whether it be stocks or whatnot, just to have money there where you can let it grow, just watch it stack. And then from there, you're not worried about what's going to happen as far as, when you are older, whether you're going to have to, if your kids have to take care of you, right? Like right now we have Jennifer's mom. It's okay, but where her husband passed away, and then pretty much, they had a house and title was a mess, and obviously went to probate. Now they're can't do nothing with this property because I believe that Medicaid or Medicare? Medicaid threw a big lien in there. So right now they're stuck where they can't do nothing with this property, right? Because they want their money and they have these huge lien there. So now that, she's there by herself, we moved her into our house, right? Because obviously we're going to have her there by herself. But, that's something that I look at and say, listen, if I get older, I don't want that for my kids. If I want to downsize, I can sell my house and pay something cash, right? And then from there, decide what we want to do, right? So that's what retirement looks like. We got to be thinking ahead of far as, what we do today is going to affect our future, right? In the
Right.
family, right?
Jennifer, how old were you when you started to think about retirement?
I probably was like 37. When I started almost to hit that 40 mark, I was like, oh gosh, in like 20 something more years, like I'm going to be at retirement age. And you don't realize how fast time flies when you're in your mid 30s, that when you look at it, you're like, oh gosh, I'm 43 now. Now I only have a few extra years. So our goal is to be financially independent when we get to that retirement age and be able to enjoy it, because we see my mom, his mom, and his mom's still working, and she's 72 because she can't retire because Social Security doesn't give her enough money to be able to live.
Right. You said two things that are really interesting. And I'm trying to teach people to stop with the mindset that retirement's an age, because it's not. And I think that's the biggest anchor as a mindset, that you're 37, you started to think about it. Oh, I got to hurry because I got 20 years left, kind of a thing, like retirement's an age. And I want people to understand retirement is not an age, and we should never strive to retire, right? You want to live life on your terms. And so then you said another phrase, which I love to teach, which is let's strive to reach financial independence. And reaching financial independence is not an age, right? There are plenty of people that are financially independent that are in their 20s, right? Now, are you going to stop working when you're 20 or 30, whatever? Likely not. But when you can live life on your terms, that I'm doing what I do to earn money because it's a passion of some sorts, or I'm helping out, whatever it is that I'm doing, not the grind that I have to go work for, whoever, and punching somebody's clock, so to speak, right? And so I think the sooner that we can all have a mindset of, at the age of 15 or earlier, I'm striving for financial independence. When my money makes enough money to support my lifestyle, that's when you're officially financially independent. So what do I need to do? How much money do I need to put to work? This is all just a math equation to make where my money makes enough money for my lifestyle. Now, 100% across the board, it's different for everybody. I know people out there that are say, I'm happy to live on $2,500 a month or $3,000 a month. I'm content. I'm good. I'm happy. There's other people out there that are like times 10. Like, I need 30,000 a month. That's the lifestyle I want to live. I need the mansion, the cars, the vacations. I need 30K a month. Right. Well, what do we got to do in life to achieve those things? We talked about education, investing in education. But again, I'm 100%. Don't invest hundreds of thousands of dollars to make less than 100 grand a year. You're most likely never going to catch up, right? Exactly. So be careful on that one, right? But I love the fact that you see both sides of the equation, but understanding if we could teach our kids that retirement is not an age, let's strive to become financially independent, do things with our money, that our money will make money for us. There's nothing makes more money than money. You worked in the bank, you see it, you saw it, right? Money makes a lot of money. And guess what? It's just, it does it while I sleep. So the sooner that we put money to work, whether it's investing in a flip or anything else where you can make chunks of money and let the compounding effect work. Yeah, I think this country, not just this country, but around the world, it's kind of a brainwash on you've got to be old. You have to work until you're 60, whatever. That's when retirement happens. Because if you ask Mark Zuckerberg when he was in his mid 20s and developed Facebook and became a billionaire, hey, Mark, do you want to retire? He's like, no, I have billions of dollars. I love what I do. He's not retiring, but he's obviously financially the guy will never worry about money in his life again. His issue is the opposite. What am I going to do with all this money? Who can I help? Right? Who am I going to give it to? We can't spend, he couldn't spend all that money. Same with like Jeff Bezos, the same thing, right? Those guys can't spend that money. It's just, it's the money's making too much money by itself without him doing anything. It makes so much money. So I think the lesson here today, guys, as we listened, One, you guys didn't talk about money till you actually got married. That's a little scary, but okay. I recommend that you definitely talk to your future spouse. Let's sit down and make sure that you guys are on the same page of how to handle money, your goals with money, what you want to do. But obviously it worked out for you guys. So I'm super happy for you about that.
Thank you.
Because money tears people apart, tears relationships, tears families apart.
It does.
It can really have a burden on people's lives. So, but I think that's why I love talking about it. It's for a lot of people / families, they don't talk about money and they don't talk to their kids about sex, right? Two things that the most important things we should talk to our kids about. And I find that people don't talk to their kids about money or sex because one, with the money, maybe you don't have any and you might be a little bit embarrassed. How can I teach my kids when I don't have any? Two, maybe you do have a lot of money and you just figure I'll teach them later. But I've learned through conversations that if you don't talk to your kids, I'm talking early, 5 to 7 years old, like when you did, Nestor, you just set a mindset in yourself at such a young age that you wanted more out of life and you went out and did what you had to do to be able to where you are today. Right. And it looks like you're just enjoying the fruits of your labor and enjoying life. So I think those are really good takeaways for everybody that are out there. So listen, I want to thank you guys for coming out. It was definitely pretty enlightening to hear a couple's perspective. Again, you're my first actual couple interview. Usually it's
Thank you for having
one-on-one.
us.
Thank you for having us.
Yeah. And continue the work. And obviously anybody that I can refer to you on credit repair, I will. And I'll post your website on the platform when it's on YouTube so people can reach out to you. But understand, guys, that she can only help you if you live in the state of Nevada.
Correct.
Okay. But they could probably learn some things on your website.
Definitely.
Yeah.
Definitely. We
At
have
least
some
visit it.
quick tips on there, that stuff that people can do to help improve their credit.
Yeah. Excellent. All right, guys. So thanks for coming out. And again, everybody, remember, I release the podcast every Wednesday, 7 a.m. as a new podcast. And if you're on YouTube, please smash the like button and hit the subscribe button. I'd like to get as many subscribers as I can. And we'll talk to you guys next week. Hey, everybody. Hope you enjoyed that episode. Really enjoyed making all these episodes for you. Remember, we're just having conversations with people's journey with money and the things they did right with it, the things that did wrong with it, and how did they really come about getting their mindset with money. So every episode's different. We all have a good takeaway from them. So do me a favor, hit the like button, smash the like button, and subscribe to my channel because every episode that I do is going to be different as all our journeys are different. So you guys take care, and we'll talk to you next week.